I do not hear you, but I heard the intro, so I think my audio is good. You're just muted, I think. I see a unmute on your next to your name. No, still not see. Hear me? Yeah, no. Speak again.
Can you hear me?
Yep, I can hear Josh now.
Okay. Well, Michael, I'll, I'll do this for him while he figures out his mic. All right. Welcome everybody. We're here with Bowie. He's been
What's up?
helping with us behind the scenes actually for a while with a lot of how our graphics have worked and uh, helped us out with a lot of the user interface early on. We very much appreciate him. But at the same time, he is a trader and
Yep.
he's got some interesting perspectives on how to trade. Kind of ICT influenced, I think, right?
Yeah, you could say so. Some level deeper.
All right. Um, okay. So I guess let's just we're gonna be doing a giveaway a little further on into the stream. Once we get 50 likes, we'll release that link to sign up. And yeah, let's just get into it, Bowie. Maybe tell us about what got you here in trading and kind of what a quick history on Bowie.
So I was always into trading. 3 years ago, I was 18. Now I'm 21. And I just basically started studying the markets. Started with ICT, all the big influencers, T Trades, Dodgy, Justin Warline. And yeah, just kind of tried to learn how to trade. Now it's my almost my third year now. So I've been through a lot. I started with crypto at first. So I was that guy that was going into Signal servers and just trying to copy every trade. Obviously, that didn't end up working. So from there, I started to go towards more forex trading. So I mean, that was a little bit better than crypto then. For my strategy, learned a lot, but then still felt that I was missing something. So from there, I switched over to futures from last year, January, and yeah, just basically traded the market open futures every single day. Next to this, I make a lot of content. I basically want to be known for just me documenting my journey, trying to learn how to trade. I am not that type of content creator that just yeah tries to post wins every single time. And that's basically my story. Now I'm here. I just perfected my trading system and now I'm just documenting my journey, going a little bit from break even to actually profitable. So yeah.
All right. Can you guys hear me now?
Yep.
Okay. Awesome. Does this sound like the right mic? Hopefully.
Yeah, it sounds amazing.
Okay. Cool. All right. So you kind of dived into it a little bit. I didn't necessarily catch everything that you were talking about. I know you talked about when you started and once you got started, what kind of struggles, because people love to hear kind of like where you started from, what struggles you went through as a trader and how you found your way out of that. Could you share some of those type of things that you dealt with, during your journey?
Yeah, good question. There's honestly a lot, so I don't know where to start. I'm really trying to document every single mistake I make and tell people like, okay, please do not make the same mistakes as me because I tend to see myself just repeating those mistakes, and I think the most important ones are like I would say just showing up late on the chart, unfocused, just really not concentrated and too busy with other things. Because you have to know, I dropped out of college and I want to pursue other things next to trading, right? The content creation, I want to build an agency, I want to do this and that. And my biggest mistake, I actually made a video on this like last week, is that I just tried to combine so many things, and trading was a little bit of the like how do you say this, like it didn't work out for trading because I was just not taking it serious enough. I needed to trade it as a business, and I really wasn't. I was okay, I was studying, I was really learning all the concepts I needed to do, but then when it comes down to opening the charts at 9:30 and following my rules, I was not good at that. So I would say that.
Yeah, I think a lot of people I think they get into the game thinking it's going to be super easy and you set your own rules and you can just do whatever you want. It's like,
Yeah.
no, it's more like running your own business, right? If you don't put in the work, you don't manage yourself correctly, then all you're doing is gambling. And that's really not a good spot to be in. And you're going to maybe find short-term success, but the longer-term success is a lot harder to find. You'll just be, you know, bleeding money, basically capital.
Yeah.
And that's not a good spot to be in. So cool. I know you're going to jump into some stuff today where you're going to share some different strategies that you found in different things and concepts that you use, which are really cool because we love hearing from traders that we don't actually know, you know, everything that's out there. So it's really cool to get a different one view of the market and also just new knowledge. You know, we love learning as traders. Maybe you can pick something out from what you hear today and implement it in your own trading.
Yeah.
Of course, do your own back testing. Don't just jump in all willy-nilly. Cool. So let's jump into that a little bit. Are you going to share a screen, or are you just going to kind of talk about the concepts that you have and how you kind of stumble upon it?
Yeah, sure. I'm just going to give maybe a quick overview on the base concept, like the groundwork of how I trade. I think that might be interesting for people that do not know anything about this. So let me just clean up my chart because I just traded and it's looking awful. Let me see. Can I share my screen? Yeah, I think I can, right? Present. Share screen. Can you see my screen? Hello, check. Can you see me?
Yep, looks good.
Okay, amazing. So the whole point of the whole groundwork of how I trade is basically based on quarterly theory, right? So I talked about this in the beginning shortly, but basically what quarterly theory is you use different cycles in the market, which are consisting of 4 quarters. Each cycle consists of 4 quarters. And what I do is, I don't know, a lot of ICT traders maybe are in here. They tend to look a lot for SMT, right? So SMT divergence, all these concepts, they're from ICT. But what quarterly theory does is it basically looks for SMT, but then between 2 quarters of a cycle. So my main indicator I have on right here is this one. You see day quarterly theory. And on here, you can basically pick your quarters, your cycles that you want to show on. So for example, here, I have the daily quarters on, the 90-minute quarters on, and the micro, right? So if I now put on this indicator, you'll see them right here. Is this visible to you? I think so, right? So what this basically is, for example, today, the reason why I was bullish from here, 11 a.m., is because we sweep a low of the previous 90-minute quarter. So if I go back in time, this is SMT. So many would class this as SMT today. But for me, it's more important because it is actually SMT between 2 quarters of a cycle. So as you can see here, this whole block is a quarter, and this one is also a quarter. And we form the SMT between those two because if you look closely here, there was no there was an SMT right here. You see? So yeah, that's basically how I trade. I look for cracks in the market, and it might sound really, really weird to you guys, but I've been trading this for like an entire year, and I know it works. I know the concepts I use, they are working if I follow my rules. So that's the hardest part, actually. And yeah, I mean, there's a lot to it. So maybe if you can ask a question about this, otherwise I'm just gonna talk forever.
Yeah. So I think what would be good is like, okay, first you're using TradingView, right? That's a platform, that's how you're finding. How do you set up the indicator? Like, what do you do to set it up so you can actually visualize this? And then you said SMT, is that right?
Yep.
Okay, what is SMT? Because I'm not familiar with it. I know maybe ICT people are familiar with it. I know it's an acronym for something, but what are you looking for with SMT?
Yeah. So SMT is basically just price taking out the high on one asset, but not on the other correlated asset.
Oh,
So
okay.
that's basically what it is. So if I have an example of today, I'm showing here three charts, right? So I have ES on the left, I have NQ in the middle, and I have the Dow Jones on the right. I always have these three because the way how I trade is basically just always comparing correlated markets. So let's say you're trading Euro USD, you would be looking at DXY and GBP USD. Let's say you're trading gold, then I always need to look at silver as well. So I always look at correlated markets, and what basically SMT is we have price sweeping a high or a low on one asset while it fails to do so on the other correlated asset. So an example here, for example, starting this day, you see here ES starting this day, we did not take out yesterday's high, but on NQ we did so, right? So you see I basically draw two trend lines right here, but it's not a trend line. It's to indicate the SMT because here we do not take previous day's high, and here we do so on NQ. On YM, even on the Dow Jones, we failed to do so as well. So that is basically SMT, and that's a basic concept. So a lot of people they use it in the ICT space, but the main difference in how I trade is I look for this. So we can mark this out as SMT, SMT. That's nice. But for me, what's more high probable to trade is if this SMT happens between 2 quarters of a cycle. So this is where it gets kind of more difficult, but how I can maybe easily explain it is we have different quarters, different cycles nested inside each other. So this right here, you see on the bottom, these four blocks. Yeah, you can ask.
Yeah, is this an indicator that you've installed, or
Yeah,
is
yeah,
this
this is an
something
indicator.
custom?
Yeah, this is called
Okay.
day quarterly theory.
Okay, so day quarterly theory, and that is found inside of TradingView. So if somebody, would you be able to, if we started up with a fresh chart, kind of show everybody how you set it up and what settings you use? Because that would be super beneficial, I think, to anybody that may want to look at this and back test it and figure out if it actually works. And as you said, it works. And that's the funny thing with trading. It's like there's so many strategies that work, and generally it's you getting in your own way, and that's why it doesn't like actually make a ton of money. It's like, no, if I would have done that, then I would have made some money, and nope, I did that. I sabotaged myself today. That's trading, man. You have to be very self-aware. Cool. Okay, so let's get into kind of like a fresh chart maybe, and then you could just show how to add the specific study and kind of the settings that you put in the study. And I think that would be really awesome for anybody watching.
Okay, nice. So I'm gonna delete the indicator right here and just do as if I'm just starting out. So clicking on indicators, I already have it marked out as my favorite, but it's basically just called day quarterly theory by 2 degrees. You see a lot of people that use it. I don't know if this is the amount of people that use it. I think so. But you click on it and this pops up right away. If you double click on it, you can adjust some things. Obviously, I'm a design guy. I want to match it with my chart. So I have a gray chart, so I need these quarters also to have like a gray tint to make it look nice. So what I do first of all is, what I talk about is quarterly theory is basically quarters in a cycle. So we have 4 colors right here, right, that we can change. You can do this to whatever you want. I think... Yeah, I'm not gonna reset it because then I can't find it anymore. I need to save it.
Yeah, no worries. You don't need to reset it. But as far as it's mostly styling that you're changing, and then those boxes that are ticked, with those usually you just want the daily, 90-minute cycles and microcycles, right?
Yeah,
those are the ones you're looking at, not the yearly, not the monthly, nor the weekly.
Well, so I only check on the daily, 90 and micro because I'm on the lower time frame chart. But if I switch my tabs right here, I have the chart, same chart, but I only take the monthly and the weekly.
Okay.
Right?
Cool.
So what you can do is, for example, take on here as well the monthly and weekly. Then this will become bigger, you see. But then it's just a little bit, I don't like it. It's too much. I want to keep it clean and keep my lower time frame with these cycles only. and then my higher time frame with the two top cycles. The
Got it.
yearly, I don't use it. So that's how I use it. And yeah, there's nothing much to configure, but maybe to explain a little bit about the cycles, because that's the most important thing. The yearly quarters, what this is, I mean, you know, everyone knows it, right? It's the yearly quarters from January to March, June, I think, June, September, and then all the way to December. That's 4 quarters. The monthly quarters is the same thing. You just split everything, you divide everything into 4. So monthly quarters is just 1 quarter is 1 week. So 4 weeks forms the monthly cycle. You get it? So after that, we have the weekly, and basically everything is nested inside each other and consists of quarters and quarters. So if we have the monthly quarters, you know that every week is a quarter in the monthly cycle. Then we can go down to the weekly quarters. What are the weekly quarters? It's basically just Monday, Tuesday, Wednesday, and Thursday. And you might say, like, what about Friday?
Yeah.
Well,
What?
Friday is a joker in terms of quarterly theory. You can just neglect it. It's more complicated, but for now, just neglect the Friday. So basically, you can see it. Every cycle consists of 4 quarters. Like I said, the weekly is Monday, Tuesday, Wednesday, Thursday. But then we have the daily quarters. And so if you think about trading, what can we divide? Like, how would they be looking like if you divide it into 4? What do you think?
Are you saying dividing?
Like, if you divide the day by 4, what do you get?
Oh, you're saying so 8, right? Well, not 8. I'm sorry.
Yeah.
Yeah.
You're right. You're right. 8 hours.
Yeah.
Oh no, wait.
No, it's not, because that's 16. That doesn't make sense. So it's what is it? 6?
Yeah, it's 6.
6.
And so
it's
if you think,
24.
yeah, exactly.
I didn't know this was going to be math quiz, and I was reading a comment, and you're like, "Oh, what if you divide?" I was like, "Oh,
No.
hold on."
I thought let's make this interactive, but whatever. Okay,
It's
so
interactive. Let's do it.
if you think about this, 6 hours times 4 is 24, so 1 day. And basically, we have 4 sessions in a day, if you think about it. We have the Asian session, we have the London session, and then I try to split the New York session into 2. We have AM and PM, right? So that's how I see it. So those are the daily quarters, Asia, London, New York AM, and New York PM. And then if you go deeper inside one session, so let's take New York AM from 6 a.m. EST to 12. That was like the last 6 hours. We can divide this 6 hours into 4 as well. And what do you get then? We get 90-minute cycles. So this all basically nest inside each other. And then within the 90-minute cycle, so you have to see, let me just untick this. This right here, the biggest one is the daily quarter. You see? So today, this was Asia, this was London, this was New York price action, and now we're trying to get into the New York PM quarter, right? So that's how it works. And then inside this whole daily quarter, which is New York AM, which I traded today, which everyone trades, we have the 90-minute cycle as well, which is divided into 90 minutes, 90 minutes, 90 minutes, and 90 minutes. So that's basically how it works. And then again, like I said, everything is nested inside each other. So within one 90-minute quarter, we also have a new cycle, which is the microcycle. You get it? So this is basically consisting out of 22.5 minutes each. And this is basically the most important thing about quarterly theory. You have different cycles, and what do? You just check for SMT between 2 quarters. And that's the easiest way I can explain it. So for example, here, this was SMT because we took out previous day's high on ES. We did not do this on ES, but we did so on NQ. So that's an SMT, right? So you understand the SMT now, right?
Yeah.
Yeah.
So it's a correlation between 2 markets. If one market takes out a high and the other one doesn't, then you're identifying that as something that didn't happen that you expected to happen.
Yeah.
Now, how do you trade that? So if you see it between these 2 markets, which you have right now, between the NASDAQ and the S&P 500, how do you take advantage of that? What is the edge in that? And how do you trade it?
Okay. So if I would explain everything, I would probably be here tomorrow still. So
okay, give us like the quickest, dirtiest way to
Yeah.
explain it, like this, and then you do it. And then
Yeah.
maybe a guide on, like, if you wanted to learn more about this, because it is very in depth, where would they find the information? Where could they research this?
For sure. Okay, so to explain it the easiest way, I just look at what side of the market holds the biggest SMTs. So for now, for example, this SMT, it's not a normal SMT. The reason why I find it useful is because this SMT happens between those two weekly quarters. You see, this was Tuesday, this is Wednesday. So you see here, this whole block is Tuesday, and then this is today, Wednesday. And this SMT happens between those two quarters, so between the days. And so for me, that is called then weekly SMT, because it happens between 2 days, and it's in the weekly cycle, if you understand. So that's basically how it works. We have a weekly SMT here, and how you can trade that is I basically pair a time frame to the SMT depending on which cycle we're in. So for the weekly sequential SMTs like we have right here, I need like an hour one displacement. I need price to really show me that this is going to hold. So for example, I'm on the 1 hour time frame. And I just want to see something like this, right? A big displacement on the hour one time frame. But let's say this is not a weekly SMT, but it's a daily, right? So a daily sequential SMT. And I kind of went too far already because I'm now saying SSMT. Well, this is basically what I mean with how I use SMT. I don't use normal SMT, but I use sequential SMT. So it basically is between two quarters. That's why it's called sequential, right? So that's how it works. And let's say this is daily sequential SMT. Then I need, for example, a 50-minute displacement. So it all depends on what the SMT, what the sort of SMT is, and then I pair that with a time frame, and then I basically look for, okay, if we have do we have a displacement there, and then I just take the trade. Okay. But the most important thing, yeah, tell me.
So if you see a displacement, what's your risk look like? Let's say this is a trade here. What would your risk look like? How much are you risking? Is the risk based on like an ATR? Or is it based on a set like pivot area or something like that? And what trade would you be taking? Would you be taking a long here or a short here?
Okay, so I took a terrible example here. I would never short this, so let me pick another one. So I can maybe explain it better. So last week, there was actually a beautiful example of a weekly SMT. I'm just trying to look back to that. I think it was... let me take a look. Right here. Okay. Let me try and find it. And then on YM as well. Okay. So this was last week. Let me just delete the indicator because it kind of makes sense if I show it right here. You see between Tuesday and Wednesday last week, 6th and 7th of May, we take out the low of Tuesday on NQ, but we also do this on ES, but we do not do this on YM, you see? So that's basically weekly sequential SMT. Let me also make it clear here. And then what I do is I wait for displacement, like I said, on the 1 hour time frame. So my stop would then be, let's say this is the displacement. I'm putting my long and short tool. My stop will always be at the low that's making the SMT. So, because this is basically my invalidation then. And then I target the highs that's closest. And this is basically how my trade are looking like. The entry can be difficult. That's another topic. But I just need a displacement. And then I put my stop always at the SMT. Because in my eyes, price shouldn't come back to this low here. Because we already formed the SMT here, which is the reason why I think the market moves. So yeah.
Okay. So in essence, you're looking for correlation. If you find something like this where you have two markets basically wick people out, and then the third market isn't making that low, it's giving you confidence to take that trade to be like, hey, I think this was a wick out type of situation, or your theory, and then you're looking to get long in the direction where it didn't, I guess, make another low on like the Dow Jones. Now, would you trade the Dow Jones, or would you trade the ES, or how do you trade different markets, or does that depend on where you're finding these correlations? What is it?
Yeah, that's a good question. I never trade the Dow. I also almost never trade ES. I focus on NQ just because it delivers the best price action. Everyone trades it, and we know it just delivers the best, right? And the Dow, you just have to see it, and ES as a little indicator to give me information on NQ and to then take trades based off that. So I would never long YM here. I just use this information from YM, from the Dow Jones, to NQ. So I know, okay, YM did not take out the previous day's low, but the other asset did. So I just take this information with me with NQ. I only trade NQ. And yeah, that's how I do it.
Awesome. Yeah, very complex. But what I can tell from looking at it is there's a framework that stays consistent every day. Mm-hmm. And that's one of the most important things for traders to realize. If you're changing the way you view the market every day, or you're changing how you're interpreting information, you're never going to find any consistency. With his strategy, what he's doing is he's looking at the market every day the same way. And with framework, you can develop strategies around that framework. And then he's using, correlation between assets, and then he's looking for deviations between that to give him a signal like, hey, this is a potential that will go higher, lower, whatever, right? So awesome. I think we can share some links on maybe how to find some more information about this. Super interesting. Let's get into some of the questions. Raj, if you could get into some of those, please. So this one's for you, bud.
Okay. What's the lowest time frame you've seen quarterly theory work? That's a good question, and basically comes down to what's the lowest cycle that you want to use, right? So if I showed my indicator right here, I have different time cycles, and it goes as low as the microcycles. So the microcycles is just, again, is the lowest cycle. It consists out of 4 quarters. Each quarter is 22.5 minutes. So for example, right now, this is the live market. This is the current microcycle that we are in. So it's from 10:30 to 12. And so 90 minutes divided into 4, that's 22 minutes. So this is the microcycle, 22 minutes, 22 minutes, 22 minutes, and 22 minutes. And so this is the lowest I go personally. There are cycles lower than that, but this is really all you need. I mean, you watch this cycle also on the 1 minute time frame, because depending on what cycle you're seeing, you just switch the time frames. For example, if I want to see this cycle, you see my charts, it gets chopped, right? It doesn't look clean. So that's why when I look at this cycle, the 90 minutes, this one, then I go to the 5 minutes, because now it looks a little bit cleaner, right? I can see the candles closely. So that's why each cycle basically has a corresponding time frame that we all use to spot the SMTs. So I would say, the microcycle, which is viewed on the 1 minute time frame, is the lowest I go to, and then I look for basically SMT between 2 quarters of the cycle, right? So yeah, that's it. Do you use time also as a signal for volatility? Yes, that's actually a good question. I use news a lot. A lot of people, they don't like trading news. Some prop firms, they do not allow that. I'm happy that TFD allows to trade when news is happening, because this is a key thing of my trading strategy. Whenever there is a day with news, my strategy just tend to work better, because in my opinion, news is not random. It's not, how do I say it? It's there to do either one or two things. It's like it will manipulate price or distribute price. So I take that with me in my trading strategy. I can show you my entire PDF what I use. Let me see here if you can see this. I mean, there's a lot, right? So that's why I'm why I'm like keeping things simple. But you see here, time and price needs to align. It needs to, my strategy needs to happen around a red folder news event or around the New York Open. So I know when the New York Open is happening or when there is a red folder news that there will be forming a lot of SMTs. And so my strategy will work better. Whereas on days like today, Wednesday, it just was more lackluster. You see here, it was more of a boring New York AM session. And that's because there was no news today. And I look forward to trading tomorrow because I think we have PPI then, right? So yeah, that's it. Oh, you're muted again, I think. I can't hear you. You can pop up the next question so I can maybe do it. What have you added to quarterly theory beyond what Trader Day developed? I would say my own input over the last years. Trader Day, to be like, I don't know that everyone knows it, but Trader Day is basically the inventor of this whole thing that I'm showing you guys. So I just made my own strategy based on his concepts, but also based on other concepts I have learned over the last few years. And then on top of that, I just added my own market experience, just some little nuanced things that I think work well. So there's a lot to it. And if you want the resource, my YouTube channel, Bowie Jackson, I gatekeep nothing. I show everything, my whole strategy. You can find me on Instagram, all the same name. But yeah, my whole strategy is like explained in 2 hours right there, and you can see what I've added and what.
Awesome. Okay, can you guys hear me again?
Yep.
I don't know why my computer just keeps deciding to mute my mic randomly. Okay, hold on. Go back to your strategy real quick. Can you pull that screen up real quick?
Yep. Let me see.
And was that a PDF that you have?
Yep.
Okay. I just want to talk on the fact that look how stylized this is. Like most people would literally have it on like a white piece of, Microsoft Word thing. And you have it is the most stylized thing I've ever seen for a plan.
Yeah.
And good for you for actually putting in the work. And
thank you.
This is stuff that people don't think is important. When you have it written down on paper, it really helps you to focus on what's important, which is the process and basically just executing, right? And he's sharing you this strategy. If you go to his YouTube, it's a profitable strategy, and it all comes to you basically as a trader to make sure you trade it as you should, right? Because the issue is a lot of people they get a working strategy and then they mess it up by getting in the way of it or not trading it the right way or adding in here or DCAing or whatever, right? Kind of the same thing. Or taking improper risk, and then they just basically skew the strategy so it doesn't work anymore. And then they jump to the next strategy. And then they jump to the next one. It's like, guys, stop jumping around, build a plan, make it really, really crystal clear what you're doing. It doesn't need to be as pretty as this, but not everybody's going to stylize their plan like this. I commend you for that. But put it on paper, right? Either handwritten, in a journal, somewhere. Just get it down. And then with clarity, you're going to find out, and through data collection, you're going to find out, well, guess what? My strategy works great. It's just I take these random trades, I do some crazy stuff, and that's actually what's creating the downturn in my P&L. It's not anything other than myself. But it's hard because you have to be self-accountable, and it's really hard to be accountable to yourself, especially in something as freeing as trading is, right? But think about it, put in the work like he did, you're gonna see the results. And that's really what's important. Okay, some more questions. Let's do some more questions. I just had to talk on your beautiful plan book thing.
Thanks, man. And yeah, awesome. If you want this this PDF, I know maybe people are maybe picking some screenshots, but you can just download it here. In my video I posted 2 months ago, you see here, I made an entire video, 2 hours, about my strategy, going over top to bottom on how I basically trade. And then if you click on this free PDF, you can basically just download it right here. A lot of people did. I think 1,300 people already downloaded this. So I mean, I just don't gatekeep anything. Like that's what I want
Oh,
to be
look,
known for.
look at the price, guys. It's free.
Yeah, it's
Weird. You
free.
can actually find good information that's been back tested online for free. You don't have to pay anybody. Amazing. And this is one of the reasons we like to bring people on and actually talk about things they're actually doing where they find success. We're not just telling you like, oh yeah, this guy's made billions of dollars. You know, that's a lot of the stuff that you see on Space. And it's like, no, I have a very, you know, awesome working strategy, but it's still, I'm struggling with it because that's the reality of trading. And I think people get so fascinated and so awestruck when they see all these big P&Ls. It's like, well, bro, they're also risking probably equivalent to whatever you're seeing to make that money. And that's not really the right style for most people. So thank you so much for sharing everything you've shared so far. Let's jump into some more questions and then let's do the giveaway. I think we might have enough for the giveaway. I'm not sure. Oh, I don't know this question. This is a you. This is a Bowie question for sure.
Okay. Let's say, man, I think some people from my last stream just tuned into here because they're very, very specific about, like, if I just explained it right now, there's no way someone would have come up with this question. But all right, I'm going to answer it. So let's say that, like, this is going to be very specific, but let's say the distribution cycle, I think, or the daily cycle. Yeah, he talks about the daily cycle is the manipulation. The 4-hour is accumulation and the 90 is distribution. How would that shake out? That's not really how I use the cycles. So the cycles, you have to know, I just use it for SMT, right? So there's no such thing in like daily cycle being manipulation, because usually the quarters inside the daily will be AMDX or XAMD. So accumulation, distribution, manipulation. And it's not the cycle that's like manipulation. Yes, it can be if you look higher on a higher cycle, but maybe go deeper on this because it's a really weird question. Is there one contract you would give more authority for the strength of the SMT? Example, ES sweeps the low, but NQ doesn't. Would this give you more or less conviction to go long in NQ? So I would always go for NQ because NQ just delivers the cleanest. But if you want to know, usually let's say we have a bullish SMT, right? So NQ takes out the low while ES does not. Then I see ES as more strong, so it will deliver higher up because you have to think about it. It did not sweep the low, so therefore it's stronger, right? It will deliver more. So that's basically how I see it. But still, I would prefer trading NQ. So yeah.
Awesome. Yeah, a lot of people prefer to trade NQ. It just seems to move a little bit cleaner than like ES, where ES sometimes will, I don't know, I call it buffoonery. It just kind of lingers and messes around, and like NQ just goes. Sometimes it's like, right away if it's going to work or not, because the liquidity is less. But yeah, that I feel the same way about NQ. But everybody should test each market to really understand what works best for them. And this brings up the thing that he talked about earlier, is like, look, he found something that he understood, that he found an edge in, and then he kind of picked what he liked and what he didn't like, and then adopted what he liked and built his own system. And that's really what people need to do. You need to build your own system off a system you understand, and then put in the work to back test it, put in the work to understand that it actually works, because then that's going to translate into having extra conviction when you make these trades later on. Because if you don't have conviction in your trading style, you're going to deviate from your plan so much that any edge that you have is eroded. You have no edge, right? So please put in the work. Like that's the thing I can say over and over. And as you can tell, Bowie has put in the work. You can look at what he's done. He's already set the groundwork. So if this makes sense to you, if this is something that interests you, lean on people that actually provide information for free, and detailed like this. And it's not as you can tell, it's not a simplistic strategy, because this is stuff that actually has some work behind it, and you don't need to pay for it. And I think that's another area people get caught up in, is they want to pay for something because they think they're just going to make millions. But usually when somebody's paying or selling a product, Why do you think they're selling it? It's because it's probably not very profitable. And if it was super
Yeah.
profitable, they wouldn't share it. They would sell it to some hedge fund somewhere, right? So just keep that in mind. Okay, cool. So I think we're going to do the giveaway right now. It looks like we shared your link, Bowie. And we love at the Futures Desk, we absolutely love having traders on that actually trade, that actually put in the work, that, you know, we can see their stats and see that they're actually, you know, trading. They're actually respecting risks. They're doing what they should be doing. And that's why, if you notice on our show, we usually have actual traders, and they're all doing different stuff. So we love having different traders on, sharing different strategies and stuff, because maybe one of those strategies could be one that works for you. Let's see. So YouTube's share. And what else? Do we have any other questions? Is that question for Bowie or I think Bowie. Oh no, Bowie's here.
Yep. Have you ever broke your trading rule and win a trade? Yeah, of course.
Yeah.
I mean, that's the most happening ever to me. Like, I do this all the time when I'm not focused. So the most important thing is that you just train yourself to only like focus on building good habits all the time, because if you are going to break your rule and you win a trade, what you're essentially doing is you're telling yourself that you did good because you made money, you're at the end of the day you're green. But then the next day what you're going to do is you're going to do the exact same thing, but it's going to result in a loss. And then you're going to overtrade because you actually knew you didn't follow your rules. And that's how this whole spiral begins, right? Because you're basically training yourself to see winning trades as good trades, whereas the only trades that are good is when you actually follow your rules. And that's why when I, for example, journal, I do not journal based off green or red PNL. I journal based off, did I follow my rules? Did everything I needed to do? So that's really, really important.
Yeah, and I'll answer the same question. Absolutely. And that's what makes trading so hard, right? You get positive reinforcement on really stupid stuff, right? All the time. You're like, yeah, I know I shouldn't get into this trade. It's not even in my system, but I swear I've seen this work before. So I'm gonna go ahead and get into it. You get into it and it works. And you're like, oh yeah. And you got this like recency bias. You're like, cool, it worked. And then you realize like later on, no, actually there's no edge in it. You got lucky on that trade. And now you got to like rebuild the habit to say, no, that's really bad. And the sooner you can disconnect from P&L and look at process and focus on process, the sooner you're going to get better at actually having consistency. Because when you're inconsistent as a trader, it's going to be so hard to see consistency in your edge. So it's tough, man. It's really tough. Cool. All right. What else do we have question wise? Keep them rolling, Raj.
Does Quarky Theory work on any security? So to be honest, I really do not know enough about securities. I just trade futures. Sometimes I look at Forex, crypto, Bitcoin, comparing it to Ethereum. In terms of securities, nope. But it will probably work because you have to see it as I'm looking at this, and this is how I think the market moves. So it will probably work on that market as well. But in my opinion, you should stick to the market that's just the cleanest, and that's the futures market. That's the indices. That's NQ. That's ES. So yeah, that's my advice.
And think about why. A lot of people will start in the stock market. They'll start in like low float, stuff like that, right? Understand the stock market, even Forex or crypto, right? None of those things generally are centralized, right? So the stock market kind of is, but guess what? They have dark pools. So a lot of liquidity and things can be going on behind the scenes that you have zero idea what the heck is going on. That's where futures comes in. It's a centralized place you can trade. And I would say of all the different things you could trade, it's the fairest and most level playing field, because CME is really good about, I wish they were, well, they sometimes are really good about spoofing, sometimes they're not. But the good thing about the CME is there's a regulating body that really makes sure that things are doing what they should do, right? People aren't doing stupid stuff, spoofing orders. taking the trades that they said they were supposed to take, kind of thing, and everything. You can see everything that's actually happening. There's no dark pools. There's no weird, 15 different exchanges for like Forex, for instance. So it's the most level playing field. So for anybody that hasn't really focused on futures, focus on futures, because if you're going to find an edge, that edge is probably going to be the most consistent in futures. And that's why if you look, longer term traders gravitate towards futures. It just seems more consistent. And that's a positive thing.
Exactly. Yeah, I agree.
So congrats on success, speculative trading. Anyways, we kind of talked about accountability earlier, so I'm going to share something that is still under development, but I think it's kind of cool.
Oh yes, I love new features.
It is a new feature. So share screen, browser tab. Okay, so this is something where it's still beta, as you can see. Let me actually pull us off so you can see just the screen. So in essence, this is a dashboard that we're currently working on right now. And this is going to be the coaching portal, maybe a mentorship. But the purpose behind this is to get groups of similar traders together. And then those traders can then create kind of like a trading pod or a coaching pod, whatever you want to call it, maybe mentorship. And you can invite traders into this coaching environment, right? And how we're going to use it is I'm one of the coaches here, so I will invite my traders and I will have access and understand that us as a firm, we don't have access to everybody's data. Like, we don't look at it, we don't utilize it. I think the only person that could get into the data would be Josh, and we just don't have time to look at people's data. So I don't know if they think we're like looking at it all the time. We're not. But the purpose is basically you can look at their stats. You can, one second, let me just get into it real quick. So you can look at stats. You can look at the trades that they took and kind of understand, what they're doing. Hold on a second. Student details, monthly news filter. I got to figure out where this is like one of the first times I've looked at it. So it's probably not the best view reports. That's what I want to look at. Okay. So now let's say you're a mentor of these traders, or let's say Bowie had a group of traders that he wants to mentor. So now what he can do is he can send messages, let them know, hey, I'm stocking this trade. Hey, I can look at this particular trader and look at their risk. How did they do today? I can look at their trades. For instance, there's no trades on today. You can look at their win-loss percentage. As you can see, this is just test data. But basically, you can look at all this data for somebody else as long as they approved you and you invited them in. So going back to this tab, as you can see, this person is actually enrolled. This other one is actually one of my students that I tried to send an invite to, which the system's not completely rolled out yet. So I don't think he was able to see it. But you will be able to see all your students here if you decide to take on the role of a mentor. Maybe we'll call it mentorship. I don't know. Naming's still up in the air. But you'll be able to look at like leaderboards of all your students, see who's performing best. And then you can look at student details, stuff like that. So I'm looking at just his details. This is like a quick overview of everything. But ultimately, the purpose of this is to get traders to work together and create accountability between themselves, and have your buddy looking over your trades, have your buddy, reviewing, hey, you forgot to tag some of your trades today, or stuff like that. It's just to help people to really create that level of accountability, because accountability is so missing in this space. And through accountability, you get better trading. So I just want to give you a quick overview of it, but we're still working on it. Super excited. I wanted to show it, so I showed it. Cool. I don't like that view. Okay, that view's better.
Really nice. Cool. I like it. This was a feature I was actually hoping to see, like really soon because it's one of my favorites. Like just sharing each other's journey and yeah, just looking at what others are doing is really nice to have because it just helps you with accountability, right? So
Yeah, it really will. And then you can share announcements like this could even be trade ideas if you're like in a trading community. But the main thing is where, right now people can be like, oh, yeah, I killed it. And then like in reality, they didn't. But the nice thing about social pressure, right? If you're in a social setting, you have like an accountability buddy and that guy or gal is looking over your trades, you're probably going to be like, I probably shouldn't take that trade because I know they're going to be mad at me, right?
Yeah.
Which is actually going to help you with your trading. So it's like we're doing everything we can to actually help traders get better. And it's through stuff like this. We know it's lacking in the space, and this is how we push the space forward and really try to add value to traders and get them to be better and continue to get better. Cool. Let's go ahead and do the giveaway, I think. Raj, can you get that up on the screen? I'll stop sharing mine. Remove. There it is, the wheel. All right, so we'll go ahead and do 3 accounts on the giveaway. Bowie, you will have the honor of mispronouncing all the names. That will be your job today.
Okay.
It's always my guest's job because I hate
pronouncing. How many winners?
Names.
1 winner?
We're going to do 3.
Okay, the first winner is Hoodoo.
A very familiar name. Hopefully it's not somebody that has won before. Understand, guys, if you've won before in the last 90 days, we're going to pick somebody else at random through email. You can't win again. We're trying to share the love. We want to give other people opportunity to use our system, our tools, and all that other stuff. Okay, next one.
Next one will be, let's see, Radu. Let's go. Congrats, man.
Congrats. All right, next one. One more.
Bowie. Yay.
Bowie.
Let's see. Last one is going towards Wireless. Man.
All right,
that's a cool name.
So. All right.
Congrats, man.
So congrats on all of our winners. If you've won before, like I said, we'll just randomly pick somebody else to get another winner. So we don't like to pick the same winners again. There's lots of people that join us for that. So let's do a little bit more questions. And then other than that, we'll probably end it. I don't want to take too much of Bowie's time. I really appreciate him being on the show, sharing all of his knowledge. And, it's awesome. We love it. What other questions do we have?
Yeah, what is your entry model on that? So like I said, I needed like a displacement that's correlated to that SMT. So if we have a weekly sequential SMT, then I need a 1 hour displacement, and then I just market enter, right? I think that's what you're asking. I can have different things. Mostly I just market enter. Just when I see the displacement, the candle is closed on the 1 hour, bam, I enter, put my stop loss at that SMT low or high, and then target liquidity that's at there to target. And then other ways, maybe I look for a fair value gap maybe that we can retrace into, and then from there. But entry model is not really the most important thing. It's more so of how you look at the markets, how it moves.
Awesome.
What's your profit ratio? I'm not really familiar. Maybe you can explain it, Brian, what that really means.
He's asking for your risk reward. Are you risking like one risk measure to make two, or does it really depend on the pivot areas and where you're risking off? Like, what would you say your normal is? That like a 1-to-1?
Good. So I really believe in conviction over risk to reward. So I can take like 1-to-1 trades if my conviction in this trade is really high. I'm not that guy who tries to catch the 1-to-20, 30 RR because guys, this is just how traders that are on social media are trying to portray to you how easy it is, but it's not. It's really not. So it just depends. If I'm really confident it's a dumb clear setup for me, then I will take like really low risk to reward setups, because for me, my conviction in if this trade will play out or not is more important than how much risk to award it is. So that's my answer to that.
Okay, cool. Looks like Wireless, he said finally, so congrats on that. I think he's been trying to win for a while. Lucky Aces. What happens on Fridays? They want to know about Friday. How does Friday count it?
No,
You know, it's
obviously.
Day. It doesn't make sense.
Okay, so Friday is basically just a joker in quarterly theory. It is not a quarter, but you can see it as a quarter. So basically, let's say you have SMT between Thursday or Friday, then that can also be seen as a weekly SMT. So it's just a joker. You can use it just like any other quarter. It just does not fit with the quarterly theory in the weekly cycle. But all the rest, it makes sense, right? You have the daily cycle that consists of 4 quarters, which are actually the 4 sessions. You have the monthly cycle, which consists of 4 quarters, which makes sense because we have 4 weeks in a month. So yeah, Friday is just a joker.
Okay. In Joker, you mean like it's a wild card?
Yeah, exactly.
Okay, cool. All right, sweet. I think that looks like some conversation back and forth between 2 of the chatting people. We'll leave that up there for a second. Anyways, I think there was a question about when the coaching mentorship program will be released. Right now, we're still in beta. I think, its first form, it's pretty much done. I haven't had enough time to really look at it. This is like a super early sneak peek. Brandon's the main driving force behind it. He's put in some really great work so far. I just don't know, anything under development, it's so hard to guess, I would hate to give a timeline, but let's say the next, 60 days, maybe, could be sooner than that. I don't know. Looks like we have some other questions. 2 more giveaway. Yeah. So the winners are picked through the little spinny wheel thing that you saw. And then somebody's asking if we could do 2 more giveaways. No, we're not going to do actual assessments, but you know what? We'll do 2 test accounts. How about we do 2 test accounts? And those test accounts, basically, the purpose of that is, look, you just learn a strategy today. Go to Bowie's YouTube, and watch his videos, and then try to forward test it to see if it actually works, right? And those test accounts provide you that opportunity. They provide you an opportunity where you can test in a very safe environment to find out if it works or not. You can work on your psychology, emotional demons. You could do all that stuff in a test account. And I think that's a great way to really find an edge, is forward testing in a very safe environment. So let's do 3 test accounts. Raj, if you could pop back on the wheel of spinny funness, and Bowie, you'll get to read off 3 more.
Amazing.
Spin, spin, spin.
First winner is Lynn. Congratulations, Lynn.
Congrats. Okay, next one.
That was the first real name, I think. The next one is congratulations, Akash. Nice. Man, I think my accent is terrible.
Sounds cooler in an American accent, so
yeah.
Got that.
And then the last one will be Popa.
Congrats, everybody. Those are test accounts. They're not full assessments. The purpose of test accounts is to forward test out strategies in a safe environment and collect data, right? Through data, you find, discovery of what actually works, what doesn't work, and that's the important part. All right. I think that's it for the show today. Thank you for everyone that joined us. We really appreciate it. Any closing thoughts, Bowie? Any closing thoughts? What do you got?
No, I really appreciate you guys inviting me on here. It's always nice to just connect with the amazing prop firm that I'm training at. So, and yeah, it was nice to share some of my thoughts and answer some questions. So thank you guys.
Cool. Awesome. We're going to go ahead and end it, guys. We'll catch you next time.
Bye-bye.